Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Good morning, everyone. Today is Friday, June the 27th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We begin the day looking at the E-mini S&P. We are at all-time highs in the pre-market, I believe. Let's take a look at this contract event. Yes. Current contract. And we're staring down a couple of things this morning. We are looking at call resistance for the E-mini S&P 500 being at around 6,200. So we could have ourselves a tremendous rally today if we do not break down below 6,200. So let's take a look at the opening range. Opening range low, 6,195. Opening range high, 6,205. It's already broken through the high of the opening range. We can see inventory accumulating here. We've got two pieces of news coming up. Personal consumer outlays and PCE, personal consumer expenditures, as it's normally called. And we've got consumer sentiment, which, those things really matter not. It's something to trade. What we are seeing is upward trend, and look at how long momentum has stayed in the overbought region. Very, very strong upside pressure. I still believe this is led by shorts who are just unbelieving. And because we've got ourselves this call resistance event, it seems very likely to me that pullbacks are going to send us higher into this level near 6,223. Low of the expected move, 6,173. High of the expected move, 6,223. This is dip buying. What's a great dip buy event? 6,200 with your stop down around the pre-market low at this time, which is the 9 o'clock candle Eastern, and that low is 6,194. Dips or buys? Dips or buys. Just very, very clear right there. Let's take a look at the NQ. Also very bullish. Not quite over the call wall, the gamma wall sitting at 22,785. Please remember these are from Mentor Q. Really great stuff. Love using them if you are ready to dig into the weeds of optionality and how the tail wags the dog. This is incredibly important to have a look at. So, opening range for the NQ is as follows. We have a low of 22,669, a high of 22,713. Low of the expected move, 22,563. High of the expected move, 22,895. Notice the average true range of these charts is expanding as we move to the north. And so we are seeing something that could show potentially 23,000 in short order. Dips are buys. Look at the slopes of the moving averages. We are very linear at this time. Very, very linear. Pullbacks into moving averages going to look very nice. My thought is opening range long begins at the low of that opening range, somewhere around 22,668. If you were being aggressive, you could try the long at 22,700. Upside pressure really showing here. So we could have ourselves quite a reflexive move to the north based on this kind of formation. Very steep and linear moving averages, no wiggles in them, so dips or buys. Momentum overbought, but that doesn't really mean overbought. It just means it's in a strong trend. All right, so buying the breakout opens up your risk, so you want to be careful about that, but this is definitely a buy the dip. Just follow the charts, and price action will tell you what's going on. What is happening here? Let's fix that. Okay, let's go to the YM. This one's always a little wonky because of the put wall being so far below, let's take a look at this opening range. Very tight, but again, we're looking at linear motion. My hope was for mean reversion instead of this rocket northward. Don't love it, but it is what it is. So we follow the trend, and the trend is saying dips or buys. Opening range for the YM, low 4,373, 43,743, high 43,817. We are just past testing the opening range high, 43,813. Price action moving to the north. We'll see how it breaks here. Pullbacks clearly buy zones. Momentum not as strong here in the YM, but trend, always master and commander, dips or buys. Okay, so if you're saying, hey, what do I want to buy? Low of the opening range looks like a nice buy zone to me. Based on this formation, there's a little gap in the opening space. And notice I have not spoken about them very much, but you can see all this volume, inventory accumulation, highest volume candlestick of yesterday occurring at the 9 a.m. candle. Traders are buying, right? So dips or buys, the shallow dip, somewhere between 43,720 and 43,750. You can use that as your range to buy. It looks very good. It really does. It looks very, very nice. Okay. Let's go to micro Bitcoin. Take a look at what's going on with this chart. It's been sitting in a really tight range, obviously inventory accumulation, right? Gets to the bottom, we buy it, gets to the top, we sell it, gets to the bottom, we buy it, gets to the top, we sell it. This is what I was looking for in the broad markets. I was looking for a mean reversion, and this is what we're having. If we do not break 106,970, we've got ourselves good upside action in the long run. So what's the opening range here? Low 107,585, high 108,035. We've broken both sides of it. We're still in inventory accumulation. I like the number right around 107,000 to buy. I would take profit up here. Selling, you could do it, but see these higher lows? These higher lows tell us that if we try to sell here, our stop needs to be really tight or potentially time-based so that if it does not fall back into the range, the price action we know is very likely to continue. If it does fall back into the range, we've got ourselves another sideways motion. Again, low of the expected move, 106,971. High of the expected move, 108,620. Dips or buys, folks. Dips are buys, especially in this inventory space. Notice momentum is dipping down as trend of our large moving average is holding steady. That tells us they are hunting for support action formations. To me, that gives us a really nice buying opportunity right around 107,300. If it doesn't immediately catch fire, we slip down into 106,970, and then they try it again. All right, we are well above our primary GEX levels. This 0 DTE area is potentially the do or die for the stock around 107,500 or so. I don't imagine that it could not dip below that. It could, and then bounce. If we lose 106,900, it's going to make this base very porous. So we immediately need to recover, or we're going to have distribution at a discount. Weekly expected move on the high level was 105,539. Traders are really pushing north, but again, not necessarily Bitcoin, but a lot of these markets are showing us that short sellers are caught here. All right, let's take a look at copper. All right, copper is in rollover, and that makes the chart pretty wonky. So what are we staring down? It's been a really big move to the upside. Yesterday's volume very shallow, again, dividing time between the prior contract and the new contract, not really telling us too much. My suspicion is a fade into the resistance area of 4.95, going to bring us a pretty nice buy zone, right? Lot of accumulation in this space, distribution at a premium, retesting the area. Notice that high volume candlestick that they broke out of was bearish. And so a lot of folks caught flat-footed on this roll. And here we are gapping up, gapping down. Very dangerous chart. Opening range opening range low, $5.07, really 5.079. High of the expected range, 5.084. So about 50 ticks of motion. We tested above that opening range. Now we're below the opening range at frontline support near 5.03. If the traders lose this zone, I believe the move down into call resistance at about 4.97 is going to give us our target areas. What is trend? Up to flat, so new accumulation event, inventory accumulation, then the dip into the call resistance if we distribute at a discount. I think this thing got ahead of itself. I would not be surprised to watch it dip. I'm still waiting for 4.80 to buy. So I think there's a possibility for that. If we bounce into the high of the opening range at 5.08, could be a nice short. We'd want to watch to see where momentum is, and breaching $5.10, not so good. All right, nat gas. Nat gas has, it fell off a cliff, right? Fell off a cliff. Yesterday it double bottomed. It's got a ton of momentum. These things are moving very savagely. They are moving a lot. Look at the high volume candlestick of yesterday. Well above it, right? High volume candlestick that pushes price down. We get to the top of the box, and what do? Break right out over it again. That's a beautiful buy zone right there. That's how it looks, right? From just price action, right? Trend, look at the trend, very negative, but momentum is high. So you might think to yourself, hey, I have got myself a short. And so if you take a short there and it immediately bounces above the high of that bearish candlestick, it's telling you that the traders are caught flat-footed and price action is going to return. You can see the VWAP holding steady, turn of the other moving averages. That gives us that clear move. The opening range here in nat gas, low $3.51, high $3.53, and off she went, right? Now, low of the expected move, $3.45, high of the expected move, $3.64. Huge call resistance up there. That's the gamma wall. And so the traders are going to sell off of that region. The dips, very likely to be the buy zones. But here's the question. How big is the dip? Since we've got literally this formation that shows a gigantic range all the way back down to $3.38 or so. My thought is wait it out, let it get back to that opening range, see how well it holds the opening range, and then take the trade. That's where your edge is going to sit. If it comes back off of the high, this makes a great short right here, incidentally, because there's a lot of reflexive action that's going to occur at that call wall. The problem is if we can't lose $3.59, we're going to continue to run up. The weekly move all the way up at $3.75. So sticky. I would wait for some measure of confirmation based on the charts here. If you take a short, you better be quick or you're going to be dead, simply because there's so much upside traction here off of this really big sell-off. I mean, it was a very, very big sell-off, and now they're trying to hold their own. All right, let's take a look at oil. Opening range for the oil contract today, this is the Globex open, of course. That is the opening from 5 Central to 6 Central, or 6 p.m. to 7 p.m. Eastern Time. That's the number. A lot of you ask me, hey, how do I make that box? Low, $65.23. High, $65.54. Look at the range. This is still in a box, folks. Still in a box. And it's got really, some news happened to come out right at this test. But, my thought is always, sometimes coincidence isn't really coincidence in the markets. And they've got these high volume areas that they are really staring down. And so that's what we're going to be looking for. I suspect that the low end of this range, near the expected move low at 64.50, still in line. $64, that's the put support. Low of the expected move, $64.50. High of the expected move, $66.14. Notice how it breached over the level yesterday and then rejected. And now, if we come into this zone, we can try along, but you probably ought to make sure that you're light and tight, because it could lose quite a bit more. I would say maybe try a micro here if you're taking it on the way down. If you're taking it on the way up, you'll have support firmly in place, probably at around $64.20. It's going to make managing risk a lot better. Notice low, higher low, higher low, higher low. That's bullish pressure. That is bullish pressure. Candlesticks retracing each other, but the dips are clearly buy zones. Let's go to gold. All right, so fade in gold. This is pretty interesting, folks. Let's go to the daily. All right, so we got a lot of noise. Let me hide these levels for right now. We have a lot of noise here, a lot of inventory accumulation. Remember, how gold tends to run is that it has these big rocket moves, and then it sits around forever. Great mean reversion formation. Absolutely fantastic. Support levels, particularly on these daily charts, right? Where did everybody say, hey, I'm going to buy? That's all the way down at 3,280. I would suspect that this chart breaks this level. It's got very strong downward flow. Take a look. Every candlestick here, high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, test giving us a higher high and a higher low, but completely collapsing. So this candlestick here from 5 days ago showed the traders really trying to do their best to get up over $3,420. No cigar. They just could not hold above that zone. And so that gives me a little bit more negative traction that I have to watch. So what's the candle in play here? From a daily perspective, this candlestick, and of course you can do this with all of your charts, no matter the instrument. All of your charts, look for high volume and continuation, right? High volume continuation, look at where it bounces. It bounces right to the base of that high volume area and rejects. We are underneath the expected move for the day. Price action continuing to the south. Low of the expected move, $3,320. We're well below that. High of the expected move, $3,358. Remember, when they break the expected move, what price action tells us is that the traders are either going to recover that move and go to the upside, or this is them trying to recover it, or break down and continue in the direction of the break. Okay? And that means what they have to do is sell the instrument, because the short put, which they've sold to collect premium, is a bullish position. And so they have to sell the instrument so that they can make their short action minus their long action a little bit closer to zero on things settle out. Look at this. Momentum way down on the bottom. Look at how long it can go for. Hours and hours and hours trying to hold the top edge. This is a bearish chart. This is definitely a bearish chart intraday. Now, 3,300, big number for them to look at. But when we stare it down, we can see, uh-oh, am I in the wrong contract? 32.92, and this one says 33.05. Hang on. Yeah, sorry, folks. Same trend, though, right? Good gravy. Okay, so I have fixed that, and here's the low of the opening range, 3,332, high of the opening range, 3,341. 3,320. Looking at this level, 3,320. I mean, this chart is, good grief, well above its expected move low. Excuse me, well below its expected move low. These, of course, are our opening range candlestick levels. From a couple of weeks ago, we have 3,281 for the implied vol move. Watch for the price action to try to gain some traction here, right? Watch it try to gain some traction. It's got a lot of volume this morning. I mean, that's a lot of volume. Yes, contract rolling event, but a lot of volume, particularly on the bearish side. So we are going to look at the candlestick that broke down under the low of the opening range. Remember, this opening range tells you a lot about what you can do, right? You can look at this and go high, low, lower high, that's the high of the opening range. If it breaks this area, you can easily say, all right, what's my trend down? My stop is going to be really wide, really, for oil. So I might want to, for gold. So I might want to take a micro, and that is going to give me that shorting action there. You might think to yourself, well, moving average is kind of flat. Listen, price tells us everything. And if we lose the base of the opening range and we get under the VWAP and the overall trend is down, this flat action event tells us nothing except, you know what, once we get the wiggles out, we're likely to move in the direction of trend, and that is downward. All right, so 3,284 there. Apologize for that. Terrible. All right, here we go. Opening range for SPY. Let's take a look at SPY. Low, $613.40. High, $613.76. So very tight. But what are we doing? Breaking to the north. Breaking to the north. What's the expected move low? $610.14. Expected move high, $616.48. Call wall sitting at $611.86, and then another primary resistance area at $615. Price action really punching north, without a doubt. Absolutely punching north. And so dips are buy zones. Don't be thinking to yourself, holy cow, this has gone up too far. You're going to get on the wrong side of a trade if you do that. I'm just telling you. Just wait for the dip and buy it. Don't short the high thinking, all right, well, if I'm waiting for the dip, I may as well short the high. No, you're going to get your face ripped off doing that. Wait for the dip, take the buy. All right? Really nice upward action. Trend is up, momentum is up. SPY, buy the dip. Let's take a look at the Qs, finally. Qs, same sort of thing. Trend, up. Momentum, up. Pegged. Opening range. Low, 547.70. We never broke it overnight, just like the SPY. High, $548.26. What did we do? We came into the base of the opening range and bounced. Use the direction of trend to tell you you are holding into positive traction to the upside. Don't buy the breakouts because the reflexive motion is likely to give you a pullback into support that will allow you to move to the north. Why is this happening? Because I think shorts are driving the market higher. That's just my gut. My gut, because we have so many candlesticks that retrace each other, I think it's the shorts that are pushing the market up. And they have to buy to cover and then get in short again on the next edge. So that's what we're looking at. Low of the expected move, $544.80. High of the expected move, $550.20. This is a bullish market, folks. It's bullish. Could we have dips? Absolutely, we could. Could the dips be big? Yes, that's where you manage your risk. Don't expect what the market is telling you is not likely. Just say to yourself, what is most likely? Well, it's most likely that I have to buy the dip. And if you can't do it because your cognitive bias says, oh my goodness, I can't do that, stay out of the market. You'll be better for it. All right, everybody, that's it. I'll see you on the streams. Midday Moneyball today. Going to be a very interesting one. Take care.